All right. So I'm not going to talk much about our business. If anybody's interested afterwards, I'm happy to give you our spiel. I thought this would be a good opportunity to talk about what we see happening in cryptocurrency in emerging markets. We are a Shanghai-based company with more than 20 years experience there, not only in crypto, but in traditional businesses. And now, given that we're involved in almost every layer of the ecosystem, we feel that we have a good handle what's happening, not so much in the US, but outside the US. I think, the first trend that strikes me is diversification. We can see here that crypto is becoming a global industry. It's largely divided between activity in the US and Asia, other countries adopting. But this perspective, I think, obscures the true character of the market. It is not at all uniform. It is actually quite diverse. It's quite different across regions and countries. And you see very different uses in different locations. And I think that that diversification will continue for a long time. I think you'll see a proliferation of different uses, especially in emerging markets. And so, I would just highlight that we tend to think of it as one unit, as one thing, and it's not at all. The second trend is increasingly policy arbitrage. One reason for the diversification is that policy across the world is very different. It's literally all over the map, from highly regulated or restricted to no regulation whatsoever. There's been a lot of movement in the policy environment recently, with many countries trying to grapple with how to manage risk of this new asset class. However, I don't see any uniform policy across countries emerging anytime soon. In fact, I think it'll become even more diverse. And this will have two consequences. One is that you'll see a more bifurcated industry. Responsible actors will move to high standard policy environments like the US, while other actors will move to jurisdictions with limited policy requirements, lax enforcement, or no policy at all. And the second consequence is that domestic policy is, I think, going to be limited in terms of how much it can influence market behavior. It's a transnational asset that can move between jurisdictions quickly. And while we may regulate exchanges, for example, in the United States in a way that we think is appropriate, the majority of the 500 exchanges in the world at the moment are in unregulated environments. So it poses real challenges for creating a fair marketplace. And this isn't going to go away anytime soon. I think the third trend is immaturity. This is a fast-moving market that is maturing slowly. I sometimes think of it like a running toddler. It's not efficient and it's not rational. And it will be an emerging market for a long time, with all the qualities that you would expect in a traditional emerging market: high volatility, limited pools of capital, information asymmetry, and lagging policy. In the US, over the last year, I think there's been a significant shift of capital away from crypto investing to venture investments that focus on use cases and on-ramps between crypto and fiat. And that I would position as up in the blockchain application layer. However, in emerging markets, the focus is completely different. It's really still concentrated on crypto assets themselves and related businesses: exchanges, exchange security, wallets, OTC exchanges, and then related businesses like gaming and short-term lending. I think for the foreseeable future, I don't think this focus in emerging markets, and particularly in Asia, is going to change. I don't think there is yet the institutional investment appetite for venture investments. And the focus really is, or the interest really is, on crypto as a digital asset. There's less interest in blockchain as a long-term transformational technology. And by the way, this is how we view the blockchain ecosystem and its different layers. And I'm happy to share this with anybody at some point if they like. The fourth trend is really around usage. I think that the use of crypto in emerging markets is fundamentally different than it is in mature markets. Here we often talk about the transformational change that blockchain will bring in the future. This perspective, while enchanting, I think omits a fundamental characteristic of blockchain, which is that its potential, its community, the technological change it represents is actually a result of social changes that have already occurred. So while blockchain may inspire future technological innovations and even economic and social ones, the fundamental change that I see is a social one. It's a different kind of social contract that enables people to transact in a different way, negotiate in a different way, build trust and credibility in a different way, store information in a different way. I think we often take a deterministic view of technological change where we think that there's some sole inventor who creates something and therefore the world changes as a result. I think in this case, at least in emerging markets, necessity has been the mother of invention. And I think in order to understand the potential use of the technology, it's important to understand who's using it and why in those markets. In the US, I think that blockchain, the need is not yet clear. I think it's a solution that's in many ways looking for a problem. We run an incubator, as Kevin mentioned, and we see hundreds of proposals a month from entrepreneurs and investors, and they run the gamut. And you get the feeling that there's this incredible amount of exploration taking place about how this technology could be used. In emerging markets, it's already being used, it's already solving problems. One of those problems is financial inclusion. Some of the highest adoption rates are in countries where you have a relatively high cost of living, high levels of income inequality, you have limited access to the financial sector or to credit, and a stable internet. And so for young people in particular, crypto is viewed as a path to prosperity, as maybe the quickest or only means that they'll have to buy a home or create some kind of long-term financial future. The second is peer-to-peer exchange. In environments where you have high counterparty risk combined with weak institutions and no legal recourse, many people would rather trust a virtual technology than a bank or a financial institution or a third party to settle whatever transaction they're engaged in. And I think this is an important point. You know, you read in the news a lot about the illicit uses of crypto, especially in emerging markets, and that exists, and I don't think we should ignore it. But at the same time, there are lots of quite legitimate uses. And I think identifying and paying attention to those legitimate uses will offer a path forward for viable business and how those uses might be adapted here. I think another use is crypto as a democratic and speculative investment. And those two things go together. It has a relatively low barrier to entry, and it has, interestingly, the perception of control and self-determination. You don't need political connections to buy it. You don't need to compete to get in on the IPO. You don't need friends in high places to buy and sell crypto. And I think, that combined with the investment opportunity that the market has shown to people, at least in the past, it becomes very attractive. And then the last one I would say is financial stability. The highest adoption rates of crypto are in highly volatile political environments. You look at Venezuela, you look at Zimbabwe, places where the currency is highly devalued, it's suffering from hyperinflation, and crypto becomes a reasonable hedge against inflation. So when you get paid, instead of going and trying to buy a TV and waiting all day in line in order to protect your purchasing power, you can buy crypto. It's much easier, it's portable, and easy to liquidate. And so I think this potential use case is one that you're going to see over and over again, and even efforts by governments, Zimbabwe tried this and Venezuela tried this, to issue their own coin or regulate those coins has proven futile. So there's something about the market that escapes the governments in those scenarios and allows people to at least try to achieve some sense of financial stability. And then the last trend I'd like to talk about is adoption. So over the course of 2018, even while crypto prices declined about 80% and the market cap overall declined about 78%, adoption continues to grow. The number of new wallet users over 2018 grew somewhere between 18 and 20% per quarter. And the number of users, both qualified users and unqualified users, continues to grow. Last year, I think it was about a 92% increase of qualified users. That means people who've gone through KYC, probably on exchanges in the US or Europe, and about 63% for unqualified users. And these are folks who don't go through KYC and probably on exchanges in Asia. I think the number of qualified users will certainly increase over time, but the vast majority of new users coming into the market are individuals in emerging markets. And that means to say that, let's not forget that the concentration of activity is outside the US, and I think will remain so for a long time. And the market activity is really centered on individuals, not institutions. And I don't think that will change anytime soon. I think I'll stop there. We've had a long day. And thank you for your time and attention. And I look forward to seeing you again next year.